Hello everyone, welcome to EduTap and welcome to today's session. So today we are going to do the RBI notifications, everything that is relevant and important from the RBI website from January and February 2023. So we will be covering everything that is very important and we will have the complete understanding today, okay? So I hope you will be able to give the right answers of all the questions, the MCQs that we are going to do today. But before that, there is a big surprise, and for that I want to welcome Gurkira sir. So he will be telling you a very big surprise, okay?
Thank you, ma'am. Predict this. Okay, sorry. Okay, so guys, surprise is not that today if I talk give you a surprise, so I will be teaching you the RBI notifications. Are you guys ready? Okay, tell me quickly, guys. तो आप किससे पढ़ना चाहते हो RBI notifications from me or from Gitika ma'am? हाँ, tell me quickly. Honest opinion बताना. From which person you want to take the RBI notification session? कृतिका मैम पढ़ाएं या मैं पढ़ाऊं? ठीक है, जल्दी बता दो. Ayan is here, Nilesh is here, Millie is here, Wayne is here. So guys, kindly quickly tell me. ठीक है? So, ठीक है? Now before I talk about the surprise today, ठीक है? So first of all, I can see an honest opinion से नहीं कृतिका मैम को पढ़ाने दो. ठीक है जी? Of course, ठीक है? Some of you are saying of course sir आप पढ़ा दो. Some of you are saying नहीं sir कृतिका मैम को पढ़ाने दो. तो do not worry guys. The surprise is not that कि I will be teaching या कृतिका मैम will be teaching. Surprise is कृतिका मैम ही पढ़ाएंगे. तो do not go on that thing. ठीक है? कृतिका मैम ही पढ़ाएंगे. Sorry, that's right. So she will be teaching you the RBI notification. ठीक है जी? वो पढ़ाएंगे आपको. But coming to the surprise that you guys were asking us from the past few days were कि sir what about, because we have covered the current affairs for January, we have covered the current affairs till February, April March हो चुका है. तो what next sir, अब क्या होने वाला है? तो दोस्तों अब होने वाला है आपका खुद का टेस्ट. That is, we are presenting you the live mock test of GA from the coming week. So now guys, are you guys excited about how your preparation is going on? So these will be your live mock tests where we will be giving you the exact exam experience. Exact exam experience होगा guys. आपके live जो GA questions हैं, 80 questions will be there. Live we will be coming on the concerned dates. That is 29th of May. That is from coming Monday at 5:30 p.m. You will be having your mock test for GA. Because you always say, sir, we want to practice mock test. We want to practice mock test. But mock test prepare करने कब हैं? ठीक है, now it's a time to start giving the mock test, and we are bringing you that these mock tests. So your first mock test will be on the coming Monday, that is 29th of May. Then your second mock test will be on 31st of May, and third will be on 2nd of June. So are you guys ready for the test guys? Because that's one thing we will want from you. ठीक है, सब लोग ready हो? ठीक है, so are you guys excited about the mock test? ठीक है, and we want to see, now let's see that you have read all the current affairs, but how you are performing. We will be testing you on from the coming Monday. ठीक है, so we will be coming up with this test. Now one thing यार जो आप लोग कह रहे थे कि नहीं जी कृतिका मैम ही पढ़ाएं, तो कृतिका मैम will be here and she will be teaching you the RBI notifications. ठीक है, so she will be here. ठीक है जी, so over to you मैम. ठीक है, और बहुत ऑनेस्ट ओपिनियन देखा, मैं देख रहा हूँ कि ऑनेस्ट ओपिनियन की तो मतलब यहाँ पे हद है कि हर बच्चा बोल रहा है कि नहीं सर आप अच्छा पढ़ा दो, पर प्लीज आप मैम को भेज दीजिए RBI नोटिफिकेशन के लिए, तो मैडम ही पढ़ाएंगे. ठीक है, चलो जी, ओवर टू यू मैम.
थैंक यू सो मच सर. एंड जिन स्टूडेंट्स ने बोला है कि सर पढ़ाएं तो बाय बाय. चलो लेट्स स्टार्ट. हाँ, so today we will be doing the Jan and Feb notifications. And before that, do subscribe to the YouTube channel so that you can get more and more such videos for the practice, and join the Telegram channel for the PDF of this session. Okay, so now starting with the first question. This is the easiest of the questions, as well as this is a question from which, like, this is a topic RBI DPI from which a question has come in the previous year also. So start here. So here, see, RBI DPI is what? Reserve Bank of India releases the digital payments index. Okay, and this is released twice in a year. This is released twice in a year. So this is released for March any year. Let's say for March 2022, it is released after 4 months. That is around June, July. Okay, July in July it is usually released, and for September 2022, let's say it is released in the January 2023. So January 2023. So the RBI DPI, that is the Digital Payments Index, it is released twice in a year. Once it is released in July and then it is released in January of the next year. Okay. So January and July, the RBI Digital Payments Index are released, and it is released for the March and the September one. So here Digital Payment Index shows us what? So it shows us the extent of digitization of payments across the country, that how much digital payments have boosted in the country. So this is the index that tells us the boost that has come, or the extent of the penetration of the and the deepening of the digital payments that has happened. And the base year is March 2018. Okay, so the base year for this index is March 2018. So here, see, this index, this was introduced in January 1st, 2021. So this was introduced in January 1, 2021. And this is the index that shows the penetration and the deepening of the digital payments that has happened. And this index depends on 5 broad parameters. So those 5 broad parameters are payment enablers. That is, you need internet, you need mobile phones to do the payments. You need payment infrastructure from the demand side. Okay, that the demand, like the POS machines and everything should be there. The QR code should be there. From the supply side, you need the payment infrastructure, as well as payment performance should be good, it should be fast, as well as consumer centricity, consumer awareness should be there. And the highest weightage in this index is given to the payment performance. Okay, that the performance should be fast, and the lowest weightage is given to the consumer awareness. So this index depends on the 5 broad parameters that you can see here. Now the DPI, RBI DPI has been constructed with March 2018 as the base, because all the index, they should have a base, because all the other years, like we are comparing 2019, we are comparing 2020 with what? So we are comparing it with March 2018, that is the base, and base value of the base is 100. So the value of base is 100. So in the introduction, the RBI said that the digital payment index will be published on RBI website on a semi-annual basis, that is, in 1 year it will be released twice. So for March the index will be released, or till March the index will be released after 4 months, that is around, with the lag of 4 months, that is around June, July. And for September, till September, from March till September, the index will be released in January, okay, of the next year. So this was the broader idea. So I have taken a session on this, as well as you can see that it is once released for March and then it is released for September. Okay, so with a lag of 4 months, this indexes are released, or this index are released with the lag of 4 months. So for the September 2022, the index was released in January 2023, and that's why this question was here. And you have to remember the value of this index also, that September 2022 the data or the index was 377.46, that is from 100 base. This is the increase that has happened continuously. The digital payments has increased in the country. So now coming to the next question, that is regarding the acquisition and holding of shares or voting rights in the banking companies. So there is the master direction that was released. So the master direction was released. As per the guidelines, non-promoter natural person have to follow the limit of what percentage of the paid up share capital or voting rights. So see, RBI has tweaked, or RBI has changed the norms, the rules and regulations, that in a banking company, how much shares you can acquire, how much shares you can hold. So there is some limitations on the shares that you can hold in a banking company. So for the non-promoter, that is, promoter is the one that has established the banking company, or the promoter is the one that is the promoter is the person that has given most of the time to the banking company, that has established the banking company. Okay, so we are talking about non-promoter, that is not related to the establishing of the banking company. So non-promoter natural person means a person like you and me can have a limit. There is the limit of 10%. So many of you are giving the right answer. Nilesh, Satish, Sorish. So yes, 10% is the right answer. So the Reserve Bank of India has tweaked the norms related to the acquisition and holding of the banking company shares. Okay, and why the norms were tweaked so that the shareholding or the shares of the banking company or the power in the banking company should not go to one person only. What if a single person holds 100% of the shares of the banking company? The person can do anything with the money of the depositors. Okay, so for the fit and proper criteria and for the major shareholders to have the minimum of the percentage. So major shareholders are the shareholders that have the aggregate holding of 5% or more. Okay, 5% or more. So they are the major shareholders. And now the RBI has said that if you want to become a major shareholder, that means if you want 5% of the shares of a banking company or more than that, then you have to take the approval from the Reserve Bank of India. Without the approval, the person or the company, some other company cannot get the shares above 5%. Okay, so for getting the major shareholding, for getting 5% or more than that shares, the approval has to be taken from the Reserve Bank of India. Okay, and this is the applicability criteria, that these norms are applicable for the small finance banks, payment banks, as well as local area banks. Okay, so now, for if at any point your 5%, you are holding 5% of the shares, you have got the approval from the RBI, but now you are selling the shares and now you have 3% of the shares. Again, if you want to make the shares 5%, like if you want to buy 2% more shares, that means your total holding will be 5%. Again, you have to take the approval from the RBI. So when you want to make the total shareholding that you have 5%, you have to take the approval from the RBI. Now coming to the limit on shareholding for the non-promoter, that is the person that has not worked on establishing the banking company. For the non-promoter, 10% is the limit of the shares that the person can have. So this is the limit for the natural persons, the persons like you and me, or non-financial institutions. For non-financial institutions also, the limit is 10% of the total shares. For the financial institutions directly or indirectly which are connected with the large industrial houses, for them also the limit is 10%. They can hold only 10% of the total shares. For 15% is the limit of the shares that the banking company for the financial institutions that are excluded, like the financial institutions that are not connected with the large industrial houses, and for other financial institutions, as well as for supranational institutions, for the big institutions, for public sector undertakings, for these the 15% is the limit. Okay, for the promoters that have established the banking company, for them after 15 years of the working of the company, after completion of the 15 years of the starting of the business, after that they have the limit of 26% only, that they can hold the shares, total shares of 26% only if they are the promoter of the banking company. I hope you have understood all of this. Now comes the second question. So now here, as per the guidelines, in case of a person permitted, here we are talking about the legal person. Okay, a person that is some financial institution or some other supranational institution. So they are the legal person. Okay, permitted by the Reserve Bank of India to hold a shareholding of 10% or more. So if a person has got the approval from RBI to hold the shareholding of 10% or more, but less than 10%, if they are holding less than 40%, sorry, more than 10% but less than 40%, the shares acquired shall remain under the lock-in period for first how many years? So this you have to tell. Okay, so if a natural person can only have 10%, but if a legal person, a financial institution has more than 10% and up to 14%, so how much, for how much period they have to keep the shares in lock-in period? So I'm getting the answer 5 years. Yes, that is absolutely correct. Okay, so here lock-in requirement in case of a person that is permitted by Reserve Bank of India to have a shareholding of 10% or more and up to 40%, if they have the shareholding of up to 40%, then they have to keep the shares in a lock-in period for first 5 years from the date of completion of acquisition. In case of any person that is permitted to have a shareholding of 40% or more of the shares, then they do not have to keep the lock-in. They do not have to keep the shares in the lock-in period that is above 40%. So above 40% shareholding, they do not have to keep it under the lock-in period. Okay. So only 40% of the paid up equity share capital shall remain under the lock-in period for the first 5 years from the date of completion of acquisition. So this was all that you required from this news article that can come in your examination. Okay, so this was enough from here. Now coming to next question, that is regarding the Utkarsh 2.0. That is a very important document of the Reserve Bank of India. If there is any confusion in the previous one, you can share the confusion. Now coming to the next question, that is the first statement is saying Utkarsh 2019 was the first medium term strategy framework covering the period 2019-2022, was launched in July 2019. So here you have to tell the correct statement. Okay, so which of the following are the correct statement? I have started getting the answers, and I am getting the answer from Nilesh. He is saying D. So that is absolutely correct. So the implementation here, it should be Utkarsh 2022. This Utkarsh 2022 was the first medium term strategy framework that covered the period 2019 to 2022, and this was launched in July 2019. Okay, implementation of the Utkarsh 2022 was steered by a high level strategy subcommittee of the bank's central board of directors. So the central board of directors had a subcommittee, and that subcommittee was implementing or was looking after the implementation of the Utkarsh 2022. The values of RBI specified in the medium term framework. So there are 5 values on which RBI work. So the 5 values are public interest. The RBI look after the public interest, integrity and independence. So RBI should have the integrity and independence, responsiveness and innovation. So RBI, inside RBI also there should be responsiveness, and the RBI should continuously work for the innovation. Diversity and inclusiveness. So inside the RBI wants to have the diversity inside the RBI also, and inclusiveness kind of thing. Introspection and pursuit of excellence. So there should be introspection, that the RBI should be looking into its own working and what it is doing right and what it is doing wrong, and there should be the pursuit of excellence from the RBI. So here Utkarsh 2.0 was launched for the period of 2023-25, and Utkarsh shows a medium-term strategy framework to the RBI. It is a kind of guiding light that what is the mission for the RBI, what is the purpose for the RBI, what are the values of the RBI, what is the vision of the RBI. So this is the complete document for the RBI, that how it should move forward in the coming 2-3 years. Okay. Okay, so Utkarsh 2022 was the first strategy framework that was released by the RBI for the medium term framework. Okay, so it is a document that is released by the RBI that shows the values, visions of the RBI. Okay, so it covers, so Utkarsh 2022 was the first strategy framework covering the period of 2019-2022, and it was launched in July 2019. So now Utkarsh 2.0 has been released in December 30, 2022, that is by the end of the December, the Utkarsh 2.0 was released, and it has the vision. In the Utkarsh 2.0, there is the vision of the RBI that has been given. Okay. So now these are the values of the RBI that you can read. It will help you in the phase 2, it will help you in the interview also. And this is the core purpose of the RBI, to foster the monetary and financial stability of the economy that is conducive to the sustainable economic growth. That stability should be there, and with that stability, with the price stability, economic stability, there should be growth also. Okay, so this is the core purpose of the Reserve Bank of India, and ensure the development of an inclusive and efficient financial system. So this is the core purpose of the RBI. There are 3 missions of RBI. First is to promote the economic and financial well-being of the people of India in terms of price and financial stability. So the well-being of the people should increase with the financial stability. Second is fair and universal access to financial services, for which RBI is continuously working. Okay, and a robust, dynamic and responsive financial intermediation infrastructure. That's why the ombudsman and that's why the banks are there, that are usually looking after your welfare. Okay, that are working for you. Next is vision. So there are 6 visions of the RBI which we have discussed in a detailed video. So these are the 6 visions of RBI, and in this the first vision is the most important, for which the RBI has given 24 strategies to follow this vision to complete this vision, the RBI has accepted 24 strategies. Okay, this is excellence in the performance of RBI's working. So RBI's function. So RBI wants to get the excellence in its working, and this is the vision of the RBI. Then there is strengthened trust of citizens and the institutions of the banks. The banks should have more and more trust in RBI. Enhanced relevance and significance in the national and global roles. The fourth vision is transparent, accountable, ethics-driven internal governance of the RBI, that it should be transparent. The internal governance should be good. Best-in-class, environment-friendly digital and physical infrastructure, as well as innovative, dynamic and skilled human resources. So these are the 6 visions. That's it that you should know from this document. Next question is regarding domestic systemically important banks. So I know that all of you know about the domestic systemically important banks. So State Bank of India, ICICI Bank and HDFC banks are the domestic systemically important banks. Now you have to tell that these domestic systemically important banks have to maintain the additional common equity tier 1. Okay, so they are very important for the economy, and if they fall down, it will be very troublesome for the whole economy, and that's why the domestic systemically important banks have to maintain the additional common equity tier 1. Common equity tier 1 is the kind of capital that the banks can use in the distress kind of situation, and that can take the banks out from the distress kind of situation. So the domestic systemically important banks have to maintain additional of the common equity tier 1. Which of the following banks have to maintain 0.60% of the additional common equity tier 1? So yes, I am getting the answer, State Bank of India. Yes, that is absolutely correct. So State Bank of India have to maintain. See, all the banks. So there is CRAR, that is capital to risk adjusted risk weighted ratio, asset ratio. So that is capital adequacy ratio. So all the banks have to maintain the capital adequacy ratio, that is adequate capital the banks have to maintain. In this adequate capital, there should be tier 1 capital. There should be tier 1 capital, that is the ongoing capital that can take the banks out of the distress situation. That is tier 1 capital. Then there is tier 2 capital. There is tier 2 capital that is not very liquid, and it is used only when the bank has gone. The bank is a gone case. There is no condition in which we can take the bank out of the distress situation. So this is tier 2 capital that is utilized in the case when the bank has gone down. Okay, so who can tell me that what is the percentage for the tier 1 and tier 2 capital that the banks have to maintain? So anyone that can tell me? So overall the CRAR is 9%, plus there is the 2.5% of the buffer that the banks have to maintain. So it is capital conservation buffer that the banks have to maintain. So 9% total CRAR. Tier 1, how much percentage of the tier 1 the banks have to maintain? So Nilesh is saying 9%, that is total. That is capital adequacy ratio total. I am asking about tier 1. Yes, Anjani has said 7% and 2%. Absolutely correct. So tier 1 capital, the banks have to maintain 7% of the tier 1 capital, that is the capital that can take out the banks from the distress kind of situation. Tier 2 capital is like a gone case capital in which the bank has become insolvent, it has become bankrupt. So in this case 2% a tier 2 capital the banks have to maintain. Okay, so in total the banks have to maintain the 9% of the adequate capital. The 2.5% is the capital conservation buffer. Capital conservation buffer. So this is the buffer, 2.5% of the buffer the banks have to maintain with itself. Now in the tier 1 capital there is the common equity tier 1, and there is the AT1, that is additional tier 1 capital. So common equity tier 1 is considered as the most liquid kind of capital because it is the most liquid of the capital. It is mostly utilized capital by the banks. So common equity tier 1 is under the tier 1 capital, and it is utilized in the distress kind of situation. So here, and common equity tier 1 capital is usually maintained at 5.5%, and AT1, that is additional tier 1 capital, is maintained at 1.5%. So mostly the common equity tier 1 capital is maintained by the banks so that the banks can get out of distress kind of situation. Yes, absolutely correct. This is the differentiation. This is the breakdown that you all must remember. Now CET1 capital, the banks are maintaining most of the adequate capital in the common equity tier 1 capital form, that is the most liquid kind of capital with the banks. So now the domestic systemically important banks are the banks that are too big to fail. If they fail down, that means our whole monetary system will be harmed, and that's why we do not want these banks to fail. We do not want, the RBI do not want these banks to fail, and that's why these banks have to maintain additional common equity tier 1. That is, they have to maintain this 5.5%, but they have to maintain additional common equity tier 1, that is for State Bank of India 0.60%, and for the ICICI Bank, SDFC Bank, they have to maintain 0.20% extra. Next is the RBI issued, so you can see that this was the list that was issued, and these are the banks that are too big to fail banks, and these are usually the banks that are very big in size. So they usually, the banks with a size of over 2% of GDP, they are selected to be chosen as the too big to fail banks, and they are chosen as the domestic systemically important banks, and usually they are chosen on the basis of their size, that they are very big bank, on the basis of their interconnectedness, that they are connected with the other institutions in India, they are connected with institutions from abroad also. Okay, so their interconnectedness is also very high, their size is also very high, and they do not have any substitute in India. So that's why they are considered too big to fail banks. Okay, so now coming to the next question, this is the question regarding the annual report of Ombudsman scheme. So you have to tell that which of the following statement is incorrect. So here the ambit of Reserve Bank Integrated Ombudsman Scheme 2021. So first of all, Reserve Bank Integrated Ombudsman Scheme. So before there were the Banking Ombudsman Scheme, there was the Ombudsman Scheme for the NBFCs, there was the Digital Transactions Ombudsman Scheme. Ombudsman is a scheme in which the complaints, if the bank is not hearing your complaint, so after 30 days you can go to the Ombudsman Scheme that is under the Reserve Bank of India. That okay, the bank is not hearing my complaint, so you are the authority, so you hear my complaint, something like that. So this is the Ombudsman Scheme where the complaints are being raised if the institution is not hearing your complaint. So in 2021, November 2021, the RBI introduced, or the Prime Minister of our country unveiled the Integrated Ombudsman Scheme in November 2021. So this is a scheme that has integrated all the other ombudsman scheme. So the Banking Ombudsman Scheme, the NBFC Ombudsman Scheme, the Digital Transactions Ombudsman Scheme, all those ombudsman schemes has come into this Integrated Ombudsman Scheme. So this was extended to include non-scheduled urban cooperative banks with deposits of rupees 50 crore and above. So this is true, as well as in this scheme there is the credit information companies also that has been included. So the credit information companies also now come under this scheme. The Reserve Bank Integrated Ombudsman Scheme was launched on November 12, 2021 by the Prime Minister of our country. That is true. Under the Reserve Bank Integrated Ombudsman Scheme, the CRPC, that is the Centralized Receipt and Processing Center, so it receives the complaints and it processes the complaints, then it sends the complaints to the respective ombudsman to clear that kind of, the complaints. Okay, was established at the Reserve Bank of India Chandigarh office to receive the complaints through email or physical mode. So in the CRPC that is established in Chandigarh, there is the email and the physical mode of the complaints that come. Okay, a contact center has been established that can assist the compliance. So they are the people like you and me. So we have some complaint against the bank, or some senior citizen has the complaint against the bank. So where they can go to understand the whole process. So the contact center has been made so that the compliance can easily lodge their complaints. They can understand about the whole process of lodging their complaint, providing them, so contact centers provide them information regarding the redressal mechanism of the RBI, that how your complaint will be redressed, and it is present in how many regional languages. So it is present in 10 regional languages, not 8 regional languages. So this was the wrong statement. Okay, so here D was the right answer because this is the incorrect statement. So this report was released, that was regarding banking ombudsman scheme, ombudsman scheme for NBFCs, ombudsman scheme for digital transaction, and then there was the integrated ombudsman scheme. As this was released in November, so from April till the starting till 11th November, the data regarding these schemes were present. After that, this integrated ombudsman scheme was released. Okay, so now here is the all the information. Reserve Bank integrated ombudsman scheme, we have understood the information that it has included the non-scheduled urban cooperative banks that have deposits of rupees 50 crore and above. CRPC has been established for the getting receipt of the complaints and processing the complaints, as well as the 10 regional languages. The contact center has been opened in 10 regional languages plus English and Hindi. Okay, so this is the information that you needed to know from here, the important developments that has been given in the report. Okay, then now coming to the next, coming to the CMS portal. So there is the grievance, the complaint management system. That is a portal that is present in the website of the RBI. Okay, so through here you can raise your complaint under the ombudsman scheme. There is also the centralized public grievance redress and monitoring system. This is an online platform of a ministry department of government of India. Okay, so here also you can register your complaint. Now coming to the next question, that is regarding the report only. Okay, so I'm getting the answer B, and that is absolutely correct. So complaints relating to the digital mode of payment and transactions were the highest. That is true, but it was 42.12% of the total complaints that was received. So in the RBI, see, RBI has given the highlights of the report, and in the highlights these are the data that were given. And when the RBI has given the data in the highlights, that become very important. Okay, so this is the data that you need to understand and remember. So here the volume of complaints received under the ombudsman scheme, consumer education and protection cell during the year 2021-22 increased by 9.39% over the previous year and stood at this. So numbers you do not need to remember, just remember the percentages. Okay, so complaints related to digital mode of payment and transactions were the highest in number, and they were 42.12% of the total complaints that have been received during the year. The rate of disposal of complaints by the Reserve Bank integrated ombudsman improved to 97.97% from the previous 96.59%. Majority, that is 63.63% of the maintainable complaints were resolved through the mutual settlement. Okay, that is the maintainable complaints are the complaints that are accepted by the CRPC, Centralized Receipt and Processing Center. So the complaints are accepted by this, and then the complaints are being sent to the ombudsman for the resolution. So most like 63.63% of the complaints were resolved through the mutual settlement or conciliation or mediation. Okay, next is, I hope you will be easily able to answer this question. So now coming to here, the answer is E, that is Consumer Education and Protection Department is the one that has released this report, and this is the way forward that was given in the RBI website in the highlights. So way forward is that the review of the guidelines on the strengthening of grievance redressal framework for banks. So the RBI wants a strengthened grievance redressal mechanism especially for the banks. So this was issued in January 2021, and there is the review of the guidelines that is going on. You do not have to read the guidelines, but just understand that the RBI is further working on the strengthening of the grievance redressal framework. Extension of the Reserve Bank integrated ombudsman scheme has happened, and the internal ombudsman scheme has been expanded, and the credit information companies have to follow the internal ombudsman scheme also. Internal ombudsman scheme, that means that in the office itself you need to have a ombudsman that is hired. Okay, so a person has to be hired to address the grievance or to address the complaints of the people, of the consumers. Enhance the efficiency and ease of usage of the CMS, that is the portal of the Reserve Bank of India. So that should be made easier to access. Upgrade and expand the contact center so that more and more people can get aware about the process, that how the grievance should be addressed, okay, and how their grievance will be addressed. So now coming to next question, that is recently upon classification of urban cooperative banks. So the urban cooperative banks have been classified into 4 categories. So in the tier 1, there are the unit UCBs, that is the single branch UCBs, the salary earners UCBs, and all the other UCBs that have the deposit size of up to rupees 100 crore. Then there is the tier 2 UCB that have the deposit size, bigger deposit size of rupees 100 crore and up to rupees 1000 crore. Then there are tier 3 UCBs and tier 4 UCBs. So the UCBs are divided as per the deposit size. So the urban cooperative banks are divided as per the deposit size. Okay, now you have to tell that tier 1 UCBs, they have the limit on housing loan sanctions to the individuals. So for tier 1 UCBs, the limit is rupees 60 lakh. Okay, now for the UCBs that are categorized from tier 2 to tier 4, what is the limit that they have to follow when they are giving the housing loans to the individuals? So it is, I am getting the answer 140, and that is absolutely, yes, that is absolutely correct. Okay, so it is 140 lakh. So 140 lakh. 60 lakh is the limit for the tier 1 UCBs. 140 lakh is the limit for the tier 2 to tier 4 UCBs. See, I am going a little slow because I want to cover everything that is relevant from your exams point of view. So from here, if you study everything that is given, it will be more than enough for the January, February. Okay, I am going slow for the people that have not studied these notifications, and here you are getting the complete explanation. Okay, so now coming to the next question, that there is the regulatory sandbox of the Reserve Bank of India. This regulatory sandbox is providing a space for the fintechs and for the startups. So this is the space that is provided by the Reserve Bank of India. This is the regulatory sandbox in which the innovations can take place. So this is RBI is providing the controlled environment, and the RBI is looking after all the innovations that are happening in this regulatory sandbox. Okay, so in this, the best type of technology, the best type of infrastructure is provided to you so that you can innovate. So this kind of sandbox has been provided to the innovators, to the fintechs. So 4th cohort has the theme prevention and mitigation of financial fraud. So all the innovations that are happening under this theme, so that will happen in the regulatory sandbox under the controlled environment of the Reserve Bank of India, if they are getting in this cohort. Okay, so there are the 5 cohorts. The first cohort had the theme retail payments, the second cohort had the theme cross-border payments, the third cohort had the theme of MSME lending, and 4th cohort had the theme or has the theme of prevention and mitigation of financial frauds. Now coming to next question, that is regarding the sovereign green bonds. So first of all, sovereign means what? Sovereign means that we are talking about the bonds of the government. We are talking about the bonds of the government. Green means what? Green means that we are talking about the bond, that is the loan that the government is taking for the green activities. That is the activities that is beneficial for the environment. So especially for the green infrastructure. That is to develop the infrastructure, to develop the solar power or to develop the wind power plants and something, so that the infrastructure can be developed for the green activities. So this is sovereign green bond, that is the bond of the government for the green infrastructure. So this will be issued through the uniform price auction. So this is correct. 5% of the notified amount of the sale will be reserved for the retail investors. So this is also correct, that 5% will be safeguarded or will be notified for the, will be reserved for the retail investors. SGRBs, now they are the government bonds. They are the government bonds. So they will be eligible for the repurchase transactions or for the repo transaction. So under the repo transaction, what is happening? That the banks are taking the loan from the RBI. So banks are taking the loan from the RBI and the banks are giving the collateral to the RBI. Now this collateral is in the form of the government securities. Okay, so now SGRB is a government security, so the SGRB can be kept as the collateral when the bank is taking loan from the Reserve Bank of India. Okay, SGRB will be reckoned as eligible investment for SLR purpose. So in the SLR, that is statutory liquidity ratio, the banks can keep the capital in the form of gold, in the form of money, as well as in the form of government securities. So now the SGRBs are government securities, so they will be kept under the SLR securities also, under the SLR purpose also. SGRBs will not be eligible for trading in the secondary market. So this is not true. The SGRBs, that is the sovereign gold green bonds, will be allowed to be traded in the secondary market also. That is, I am the investor, you are the investor, I have bought these bonds, but now I do not want them, so I will sell it to you. Okay. So this was all regarding the SGRB's uniform price auction will be conducted for the SGRB. That is, it is a public sale in which a fixed number of similar things are sold at the same price. So that is all the information you can read here and understand from here. Okay. So I have given you the basic understanding of the sovereign green bonds. Okay. Now coming to the next, that is recently in January 2023, RBI released the report titled State Finances. So this report was released by the Reserve Bank of India. Now you have to tell that what is the theme for this report. So now I will be going a little faster. So now tell me that what is the theme for this report. So the theme for this report was capital formation in India, the roles of state. Okay. So this was the theme of this report. I have taken a complete session on this state finances, a study of budget. Now here you only have to read and you only have to consider the highlights. So if you have read the highlights, if you have understood the highlights, that is enough. That is more than enough from this report. Okay. So if you have gone through these highlights, that will be enough from the examination point of view. Here these highlights have been discussed in the session. So I am not going to discuss these again. Okay. So you can read these highlights and they are important from the examination point of view. That's it. So now coming to the next question, that is regarding recently in January 2023, RBI recently advised the market participants to utilize the price yield range setting. So what was happening that when the investors, now here in the sovereign green bond or in the government securities market, what happens that the RBI has the portal. Okay, through this portal, the banks and the regulated entities under the Reserve Bank of India can buy or sell the government securities. Now, when they are buying the government securities, they set a price that, okay, I want to buy the government securities at rupees 180. Now, what if that one extra zero is added here due to their fat finger error, or this is called a fat finger error, where you are doing the mistake in the setting of the price or in the putting of the price. Okay, so this is a fat finger error that has happened, and due to this, many a times the banks say that, okay, we do not want to buy at this price, and after the auction they try to cancel the purchase. They try to cancel the purchase after the auction. So now the RBI has said that why you are doing so. Set a price range or set a yield range that you want to get this much yield or you want to pay this much price. Set a range that has been provided in this portal. So instead of putting a number, you can set a range, and then you will not be doing such kind of fat finger mistake. So this is the portal of eKuber. eKuber is the portal, the core banking solution of the Reserve Bank of India. So the eKuber is the core banking solution of the Reserve Bank of India. The commercial banks, scheduled urban cooperative banks, the primary dealers, insurance companies and provident funds, all that are engaged in the government securities, we can say, who maintain fund account with the Reserve Bank of India, and they are members of this electronic platform. Okay, so RBI has advised the participants in the government securities to utilize the range setting on the eKuber platform. That you can set a range. You do not need to make this fat finger or big figure errors. Okay, so this is the this was the news article, and you have to remember that, okay, eKuber is the platform. It is the core banking app in which the range setting has been provided, and the RBI has mentioned this range setting thing. Now coming to the next question, that is the RBI has a central repository of information on large credits. Okay, so this is the database that has been maintained by the Reserve Bank of India to see that which bank is giving which kind of big loan, we can say. So this is the database that is maintained by the Reserve Bank of India, where the banks report their exposure of what and above, which is used for monitoring purposes. RBI sees that, okay, the banks are giving how much of the loan to a single authority, that if that single authority fall down, the bank will be harmed. So as per that, the guidance is given to the banks. So it is 5 crore. It is 5 crore. Okay. So here the RBI statement on the health of Indian banking sector was released. There was much speculation that was coming out that the banks are involved with a certain business conglomerate, and that's why many banks are going to fall down. So RBI said that it is not a situation, and the RBI is maintaining a good vigil. The RBI is maintaining a vigilant overview of the banks. Okay, so RBI maintains a constant vigil on the banking sector, and the RBI even have a central repository of information on large credit database system, where the banks have to report their exposure of 5 crore or more, which is used for the monitoring purpose. So RBI knows that which bank has given what loan, so the media do not have to do any kind of speculation, and they are making a big trouble out of this speculation. So as per RBI's current assessment, the banking sector remains resilient and stable. So the media house should stop doing these kind of speculation. This was the main agenda of releasing this kind of statement. So here this was the data point that is important and that you have to understand and remember. Okay. So next question is regarding the first advanced estimates released by the National Statistical Office in January 2023 placed India's real GDP growth at 7%, and the GVA, that is supply side, on the supply side the gross value added is what percentage? So this you have to tell now. So here I am getting the answer 6.7%, and that is absolutely correct. Okay, so as per the first advanced estimate, the real GDP growth has been estimated at 7% for the 2022-23, and the GVA has been expected at 6.7%. Okay, from the supply side we calculate the GVA, from the expenditure side we calculate the GDP. In the second advanced estimates, the real GDP growth is kept at 7.0% only. Okay. So now coming to the next question, that is regarding the TREDS platform. So here, see, TREDS is what? It is the trade receivables discounting system. Okay, in this what happens? That the MSMEs, this is the platform, this is an online platform especially for the micro, small and medium enterprises. So micro, small and medium enterprises, they are engaged with the many big businesses, or they are engaged with big corporates. They are even selling to the public sector units. So let's say the public sector unit has said that, okay, we will take your material of 2 lakh, but we will pay after 3 months. So the MSME will get the payment after 3 months, but the MSME is a very small unit. So it wants the payment now so that it can further continue the process. So now the MSME will get the payment after 3 months, that is 2 lakh rupees the MSME is going to get after 3 months, but the MSME want the money right now. So this trade receivables discounting system, in this the bill invoice is the trade receivable, that is this much receipt the MSME has to do, this much the MSME has to receive. So it is trade receivables. Now discounting system, so this is the complete system that I have explained in a session, so I will briefly explain it. So supplier, that is the MSME, supplies the goods and services, and the buyer is saying that I am not able to pay right now, I will pay after 3 months. So the a supplier has raised a bill invoice. Supplier is creating a bill invoice. In this bill invoice, the payment that, okay, this much payment has to be made at this date. So this information has been written. Supplier login in the trade platform, in the trade receivables discounting system platform, the supplier is logging in. The supplier is uploading the invoice, the bill invoice for which the money has to be raised. Okay, the invoice is converted into factoring unit in which the banking details, the bank account details of the buyer, of the seller, everything is mentioned, the amount is mentioned, the date is mentioned. After this, like the bill invoice has become the factoring unit now. The buyer verifies and approves the invoice or the factoring unit that, okay, these are the details and yes, I will pay after 3 months. Then the financiers that are the NBFC factors. So there are the NBFCs that are engaged in this kind of business. So they will take this factoring unit, they will take this bill invoice and they will say that, okay, there will be the bidding that will happen. Some NBFC will say that against the bill invoice of 2 lakh, the NBFC is ready to pay 1,80,000. The other NBFC is ready to pay 1,85,000. The other NBFC is ready to pay 1,90,000. So the supplier accepts the most favorable bid. The supplier will take 1,90,000. Okay, immediately the fund will be transferred to the supplier. So the settlement instructions for debiting the financier. The money will be taken from the financier and the money will be sent to the seller's account, Okay, after 3 months, the financier will be getting the 2 lakh rupees from the buyer. So this is the whole process that happened. So 1,90,000, it's actually what? It is the discounted rate on which the trade receivable is being sold or is being traded. So this is a process that has been created by the trade receivables discounting system. Now to increase the scope of this trade receivables discounting system, there is the improvement that has been made in this system, and which of the following is the correct improvement? So insurance facility will now be permitted on the trades so that the financiers will be insured that, okay, if they are taking the bill invoice, what if the buyer do not pay? So for that, against that, the insurance providers will be providing the insurance against the premium that the financier will give. All entities or institutions eligible to undertake factoring business under the Factoring Regulation Act. So there are the NBFC factors that can take this factoring business, that can take this discounting business. Okay, so they all are permitted to get into the TREDS platform. The invoices converted into a factoring unit will be completely backed by the Government of India. It is not so. The Government of India has not said such a thing. Secondary market operations will now be enabled on the TREDS platform. That is true. If one financier wants to sell the bill or wants to sell the bill invoice, the financier can do so. Okay, so this C was the wrong statement. So here you can see that the insurance facility will be provided on TREDS, the secondary market activities will be permitted on TREDS, and all the participants that can take the financial business on the TREDS will be allowed to get enrolled in the TREDS. Okay, so that is the banks, NBFC factors and other financial institutions, they will be permitted to get enrolled on the TREDS platform. I have taken a complete session on the TREDS. So if you have not understand this, you can go and see that session. Okay, just you have to remember that what changes have come. If you understand the changes, that's it that you require. Okay, now next question is regarding the fourth participant. So there were MSMEs that are allowed in the TREDS platform. There is also the financiers. So there are the MSMEs. So there will be some buyers. MSMEs are sellers. So there will be buyers that will have to make the payments. So they are also allowed in the TREDS platform. Then there is the financier that is actually paying to the seller at a discounted price. So those financiers are also allowed on the TREDS platform. So now which is the fourth participant that is allowed on the TREDS platform? So it is insurance companies that will be insuring the financiers. If the buyer is not paying, the insurance company will be paying, but the financier will have to pay a premium. Okay, so this is E. So first participant is MSME, second participant are the buyers, corporate buyers, PSUs and such kind of buyers. The third participant is financier, the fourth participant is insurance companies. Now you have understood everything. Now moving forward, regarding the financial literacy week 2023 form, this was held in February, and you have to tell the theme. So the theme is given, you have to tell that when the financial literacy week started, okay, in which year it started. So the theme for this year was, it is 2023. So the theme for this year was good financial behavior, your savior, okay. So RBI has been conducting the financial literacy week since 2016. So this is the right answer, okay. So I hope all of you are understanding, okay. So financial literacy week was conducted in February 2023, and the theme was good financial behavior, your savior. This theme means that the focus will be on creating the awareness regarding the financial behavior, regarding the savings, the planning, the budgeting, and prudent use of digital financial services, okay. That they should be engaged in the financial activities regarding the savings and planning their budgeting, their money, okay. Now next is Harbinger. Harbinger 2023 was implemented, we can say, was organized. So it is the second global hackathon that was organized. You have to tell the theme of this hackathon, okay. So this is the second global hackathon that happened. Tell me that when the first global hackathon, Harbinger, happened, okay. First global hackathon happened in which year, that you have to tell. So it happened in which year? Give me the right answer of that one. That the Harbinger, the first global hackathon, Harbinger, happened in which year? So yes, it happened in 2021. So first global hackathon happened in 2021. Now second global hackathon happened in 2023. Okay. So the theme of the second global hackathon is smarter, the inclusive digital services. Okay. So this is the theme of the second global hackathon. For the first global hackathon, who can tell me that what was the theme for the first global hackathon that happened in 2021? So tell me the theme for the first global hackathon. Yes, it is smarter digital payments. This was the theme for the first global hackathon. So here you can see that the Harbinger 2023 innovation for transformation. This is the hackathon that happened. Hackathon means that it is a competition kind of thing where the innovation has to be developed. Okay. So the theme was inclusive digital services. This was the theme for the second global hackathon. And here the problem statements were given on which the solutions had to be developed by the innovators. So the problem statements were innovative, easy to use digital banking service for the differently abled. So some innovative idea had to be brought. RegTech, that is regulatory technology solutions to facilitate efficient compliance by the regulated entities. This was the second problem statement. The third problem statement was regarding the central bank digital currency, especially the offline mode of the central bank digital currency. Okay. Fourth problem statement was regarding increasing the transactions per second. So more and more transactions can happen per second. So this was the problem statements, and this is the complete news articles and the notification regarding the Harbinger 2023. Next is regarding the UPI access to the foreigners and the NRIs. So try to read this question and give the correct answer. Yes, I am getting the answer P2M only, and that is correct. So to start with, this facility will be extended to travelers from the G20 countries. So the foreigners that are coming from G20 countries, they will be getting this this kind of facility, that they will be connected to the UPI. Okay. The UPI facility extended to travelers is for their merchant payments only. It is not for person to person or peer to peer transfer. It is only for the payments that the foreigners can make to the merchants. This decision is issued under Section 10(2) read with Section 18 of Payment and Settlement System Act 2007. So you just have to remember that it is under the Payment and Settlement System Act 2007. Banks, non-banks are permitted to issue the prepaid payment instruments, that is the wallets will be provided to the foreigners. So how the foreigners will be able to use the UPI? So the foreigners will be able to use that kind of facility through the wallets, through the like the Paytm wallets you have, like the PhonePe wallets you have. So the money will be transferred to the wallets, mobile wallets of the foreigners, and through that the foreigners can make the payments to the merchants. Okay, so wallets will be provided with INR. So the foreigners will be giving dollars, the foreigners will be giving the pounds, and that currency will be converted and INR will be given to their wallets. Okay, digital wallets. And this is full KYC PPI. That means full KYC, know your customer, should happen with the foreigner, that the foreigner is this individual, and the identification of the foreigner should happen. The amount outstanding in full KYC PPI that the wallet can hold only up to rupees 2 lakh. Okay, so this is the limit for the wallet. So this is the complete news article that RBI recently decided to allow the access of UPI to the foreign travelers, to the NRIs visiting India. So they are providing the UPI facility or the PPI. They are providing the wallets to the foreigners or the NRIs that are coming from the G20 nations especially, and they will be provided with the PPIs, that is they will be provided with the wallets. Those wallets should be denominated in INR only. The money in the Indian rupees can only go in that wallet, and there should be full KYC PPIs. That means the wallets can open only after the full KYC has happened. Okay, so this is the complete news article, and the payment can be only person to merchant. So you can read all of the information I have provided you at one place. Next question is regarding that, okay, RBI is extending the UPI for the inbound travelers. So the people that are coming in India, the travelers that are coming in India, they will be able to access the UPI through the prepaid payment instrument. So they will be provided with prepaid payment instrument, especially the wallets will be provided to them. So you have to tell that which of these banks have started this kind of facility. So yes, I am getting the answer E, and that is absolutely correct. Nilesh has said E, Wayne has said E, Millie is also saying E, Priya is also saying E. So yes, that is absolutely correct. IDFC First Bank and ICICI First Bank, these are the two banks that have allowed this kind of facility. They have started providing the wallets. Similarly, the two non-bank PPI issuers, that is Pine Labs Private Limited and Transcorp, has also started providing this kind of facility. Okay. Next is regarding the government securities lending. So see, what was happening that the RBI was selling the government securities, and the banks and the other like retail investors, they were buying the government securities. But now the RBI has released the draft guidelines regarding the lending and the borrowing of the government securities. You can lend the government securities and you can borrow the government securities now. So this will be allowed for the banks, and these are the guidelines. You have to tell that which of these directions are incorrect. Okay. Okay, I am getting the answer B. Answer B is not correct. B answer is not correct. Most of you are giving the answer B. Try to read the whole question. B is not correct. B answer is not correct. No one is giving the right answer. So let's start one by one. Okay. Government securities issued by the central government, excluding the treasury bills, shall be eligible for lending and borrowing under the GSL transaction. That is correct. So only the government securities, that is excluding T-bills, only that is allowed for the lending and borrowing. So government securities, that is dated government securities, that is long-term government securities, are allowed for lending and borrowing. So T-bills are for short term, and that's why they are not allowed. Okay. State securities, state government securities are also not allowed for lending and borrowing. So now I am getting the answer from Mayank. He's saying E. Sorish is also saying E, and that is correct. Okay. So B and D. Government securities. So B is not correct because alone, like B option is not correct. E option is correct. Okay. So government securities issued by central government, including treasury bills and state government securities, they are eligible to be placed as collateral. Now you are lending or borrowing. You are lending or borrowing, then only the central government securities that are for the long term, you can only lend that or borrow that. But if you are trying to place as collateral, then you can use any kind of security, that is central government security, that is short term security, long term security of central government, or the state government securities. Okay. All GSL transactions shall settle on delivery versus delivery basis. You are giving me the lending, you are giving me the government security, and against that I am giving you the collateral. So that is delivery versus delivery basis. All GSL transactions shall settle through the Clearing Corporation of India Limited or any other central counterparty. So there should be a third party that should be involved between the between the lender and the borrower. There should be some third party that should be involved, and this is approved. Central counterparties that are approved through the Reserve Bank of India. So this was wrong. It should be Reserve Bank of India. Okay. So here you can see that government securities are the securities. So they include short-term securities such as T-bills, as well as they include the dated securities, that is long-term securities of the central government, as well as state development loans are also called the state securities, state government securities. So these are also state government securities. So these are also government securities. For the state, there is no short-term security, no T-bill that is allowed for the state to give. Okay. So here the government securities issued by the central government, excluding the treasury bill, only the central government securities that is for the long term. So they are called dated central government securities. Only those securities are allowed for the lending or borrowing, but for the collateral purposes. So a bank is lending the security to other bank. So this other bank will be giving the collateral. So when the bank is getting the government security, against that the collateral will be given to this first bank that is lending the government security, as well as later on what will happen, that the fee will also have to be paid. So the fee will also have to be paid, that is GSL fee. For the lending, the fee has to be paid by the borrower. So this is the fee paid by the borrower to the lender of the government security for lending the security as mutually agreed between them. So government for fee will also be paid, okay, for the government securities. So these are the eligible entities or participants. I have taken a complete session on this that you can see, okay. So delivery on delivery basis, the GSL transaction will happen. You give me the government securities which you are lending to me, and I will give you the collateral, okay. And the collateral can be T-bills, can be dated securities of central government, can be state development loans or the state securities also. But the borrowing that I am doing can only be of the central government securities for the long term, that are present for the long term. The first leg of GSL transactions shall settle either on T+1, that is today the trade is happening and today the settlement should also happen. Today we have decided that we will you will lend me and I will give you the collateral. So today only the settlement should happen, or T+1 basis, that is today we are deciding that okay, you will lend me, I will give you the collateral, and tomorrow we are settling. Tomorrow you are giving me the government security and I am giving you the collateral. So that is T+1 basis. All the transactions of the lending should happen through the Clearing Corporation of India or any other central counterparty that is approved by the Reserve Bank of India for this purpose, okay. So, and the trade can only happen, the trade should not happen in any exchange, stock exchange or such kind of exchange. The trade can only happen on over the counter markets, that is no exchange should be involved. Next question is regarding UPI Pay Now linkage. This is a very important question, and UPI Pay Now, like a question has come in the previous year also regarding the UPI Pay Now, okay. So there is a daily transaction limit of rupees 60,000 in a day for undertaking cross-border remittances transactions through the UPI Pay Now linkage. So I am getting the answer here. All of you are saying B, and that is absolutely correct. Okay, so first of all, UPI Pay Now linkage has happened. UPI is a real time payment settlement system of our country, or it is a real time payment service of our country, and the Pay Now is the real time payment settlement service of the payment transaction service of the Singapore. So India's UPI has been linked to the Pay Now of Singapore. Okay, so that is the cross-border remittance transfer can happen. That is person-to-person transfer can happen. The remittance transfer can happen through this Pay Now UPI linkage. The payment cannot be made to the merchant through this UPI Pay Now linkage. This UPI Pay Now linkage is not for the merchant transfer. Okay. So now State Bank of India, Indian Overseas Bank, Indian Bank and ICICI Bank will facilitate both inward and outward remittance transfer, or inward like the money that is coming in and the money that is going out. That is money that is coming in India and the money that is going to Singapore. So all these banks will be allowed for that. But Axis Bank and DBS Bank will only be allowed for the inward remittances. That is for getting the money inside India. They will not be allowed to send the money outside India. For Singapore users, the service of inward and outward remittances are allowed through the DBS Singapore, that is the bank in Singapore, and a non-bank financial institution, that is Liquid Group. The funds that is held in bank accounts or e-wallets can be transferred to or from India using just the UPI ID. So you have UPI ID, you have the virtual payment address, and through that address you can send the money from UPI. You can send the money to Pay Now at the virtual payment address. Okay. So to the mobile number also the money can go, because the mobile number is linked to the UPI. Their mobile number is linked to the Pay Now, and that's why through mobile number also you can transact. So this was the complete news, and you can read it and you can have the clarity that all these banks are allowed for receiving the transaction, for receiving the remittances, but only these banks are allowed for sending also. Okay. So that is Axis Bank and DBS Bank are only allowed to receive the transactions, not for sending the transactions. So next is, and this is only for the cross-border remittances, that is, it is only for the person-to-person transfer of the money. And here the limit is rupees 60,000 in a day for the daily transaction limit. Next is UPI Pay Now linkage transactions are happening, the remittances, like the inward remittance is happening and the outward remittance is happening. Now the outward remittance comes under which scheme? Outward remittance comes under which scheme? So it comes under the liberalized remittance scheme. This is the scheme that talks about the outward remittances through the resident individuals in our country, or through the Indians in our country. So from that the outward remittances are happening, and for that there is the limit of what for one financial year. What is the limit under the LRS for the outward remittances through the resident individuals for 1 year? What is the limit under the LRS? So you have to tell the limit under the LRS. So I'm getting the answer 2,50,000, and that is absolutely correct. Okay. So liberalized remittance scheme is the scheme under which which talks about or which approves the outward remittances freely send up to USD $250,000. Okay, so it is in dollars. $250,000 in 1 year you can send to some other country, to the people in other country, we can say. Okay, from April to March, and this is the money that you are sending for the current account transactions or the capital account transactions. You are taking the rupees and you are converting it into dollars. So for all of that, the limit is 2,50,000, and this is the limit for the resident individuals, and this LRS scheme is only for the outward remittances that is done by the resident individuals. Okay. So now Singapore is the first country with which cross-border person-to-person payment facility has been launched by India, and Singapore has already done this kind of payment, this kind of linkage with the authority Bank of Thailand, that is the monetary authority of Thailand is Bank of Thailand. So Singapore has already a linkage with the Bank of Thailand, but it is like UPI Pay Now linkage is the first in the world that is working on the cloud-based infrastructure feature, as well as that is working on the non-bank financial institution participation. Okay. So now coming to the next question, that is regarding GSL only. So try to answer this question. So here the government securities lending can be for the minimum period of 1 day and can be for maximum period of 90 days. Okay, so this you have to remember. So GSL transactions are allowed for the minimum period of 1 day. So you can lend the government securities for the minimum period of 1 day and the maximum period of 90 days. Next is, this is the last question. Try to read this question and give the right answer. Okay, so I'm getting the answer C, and that is absolutely correct. Okay, so here the notification was regarding the extension of the time. Okay, so RBI extends the time for the renewal of the agreements for the existing safe deposit locker. So the agreement has to be renewed between the bank and the customers by January 1st, 2023, but the banks had not even informed the customers that, okay, we need to renew the agreement. So there was no information that was sent to the customers, or there was too much delay that was happening. And that's why the RBI has given the new date, that is December 31st, 2023, for the banks to get into the new agreement with the customers. Okay, so the intermediate milestone, so a phased path has been provided to the banks that 50% of the locker agreements should be renewed by June 30, 2023, and 75% of all the agreements should be completed by September 30, 2023, and by December 31st, 2023, you have to do all the agreements, like all the locker agreements should be renewed. Okay, so this is the time period that has been provided, and it has been said that by April, the information has to be given to the locker holders. Okay, so this is the complete information that has been provided. So I hope you have understood this very clearly. So now these were the questions. So I hope you have got value from these this session, and I hope you have understood the notifications. If there is any confusion in any of these, you can raise your questions. Okay, raise your question if you have any confusion in any of the notification, and I have tried to bring the notifications that are very important for the examination and that are hard to understand also. Okay, I hope you have got some value from this session. Thank you, Nilesh. So in the comment section, do tell me that how much marks you have got. So there were 25 questions. So out of 25 how much marks you have got? So do tell me in the comment section. Okay, so if you have got marks like 20 and above, that means your preparation is in full mode and it is like going very good. But if you have got 15 above, that means you have to revise again. You know your stuff, but you have to revise again and again. If you have got less than 15, that means you must be focusing on some other area, okay, in general awareness or schemes or something else. So in the comment section, do tell me about your marks. Okay, so thank you very much everyone. And before going, so this is the complete guidebook. If you have any common query regarding the examination, regarding the preparation, regarding the organization, all your common queries can be answered through this single guidebook. Okay, if you want to know about the syllabus, if you want to know about the previous year cutoffs, everything will be provided through a single guidebook. And in this guidebook, if you want to know about the sources, the strategy, everything is provided. So do download this guidebook. This is absolutely free of cost to save your time and to save your efforts, and you can easily download this guidebook. The link is given in the description box below. Okay, so in the comment section, do tell me that how much marks you have got out of 25, and if you have any confusion in any of the questions in any of the notification, I have made separate sessions for the complicated ones, so you can see that session also. You can comment and you can tell me that, okay, in this question you have got the problem, and I will try to cater to that question. Okay, so do tell me in the comment section how much marks you have got. If you have any query, you can mail us here or you can contact us through this number. Thank you very much everyone. So next session will be on the May 2023 notifications. Okay. Yes, yes. So there will be mega revision on Saturday. So that will be most possible. So thank you everyone. Thank you very much.